Hey guys, Todd here. This is the free stock options update for Tuesday, November 11th. Crude oil just continues to kind of melt away here, and we are tracking it inside of a third wave breakdown. We are through the equality point, which is what we'd expect for a good third wave, which basically means it's going to be longer in price traveled compared to wave one. That being the third wave would be longer than wave one. So that equality point was at 81 bucks, and we should get down to the 1.618 relationship, which is very typical in a third wave because it's color coded green by the software, which tells you that's the typical wave 3 relationship. And you can see that we have one final little support level here back from the June 2012 low at 75 bucks. So we have 75 as the target. We have 72.42 in the fib. So that's going to be the near term wave 3 support level. And if we break this chart down a little bit, bring down one small degree, we're looking at within the third wave, just like the other trend waves, which are 1, 3, and 5, they break down into 5 smaller waves. That tells you you're in a trend wave. So there's 5 waves in 1, little ABC up in 2, a little 5 wave move down in higher degree wave 3, a little ABC up in 4, and then 5 down in wave 5. Pretty simple. So we're looking for a combination of that old June 2012 low plus the 1.618. So you can sell crude. The XLE is looking pretty good. The energy ETF, this is actually looking like a little bit of a fourth wave setup here. Let me go over. Oops, I got to bring in a couple more degrees over there. And there we go. So we're looking at a fourth wave pattern there in the XLE, 3, 4. This is interesting. It's done what they call a 3 drives to a top. Okay, so it's done kind of a push there for 1, a push there for 2, and a push there for 3, and it is within a fourth wave move. Okay, we've held fib price as well as fib time resistance. So the XLE is looking pretty good to give us a 5 wave decline in wave 5 to the downside there. So the implied volatility is pretty decent there in XLE actually. Just bringing over Thinkorswim here. Implied volatility is the green level, so it's at about 40% right now. It's at the 42nd percentile in terms of IV rank, so not great. You could sell call credit spreads here if you like. You could do like, you could sell 90s, 90, 91, 90, 92, however wide you want to go. Do it out in December against that. Or if you want to get a little bit more directional, we can look to do like a long put vertical, do something like, you could do like an 88, 88, 83, just to kind of get you started. Or if you want to be a little bit more aggressive, I do think we're going to push down to 80, 75 as crude goes down and test those lower levels. So, if you want to do a $10 wide spread, you could, but, take it in stages. We'll probably look to do something like 87.5, 82.5 with clients tomorrow just to get started. Kind of take it in two steps on the way down. Okay, guys. Also, we have 2 webinar announcements. Wednesday will be Motive Wave Wednesday, as we do every Wednesday. We are going to go at 8:45. So just go to the homepage here, and I'll link you to the sign-up page after the video. We are going to do about 45 minutes of live market analysis with Motive Wave. 8:45 New York. We're going to talk about the best setups so far in the week, what to look for in the back half of the week. We're going to have a pretty good Elliott wave and fib overlay using Motive Wave software. So that is going to be November 12th, 8:45. This will fill up. It did last time. So be sure to sign up there, be involved, and we will see you on Wednesday. All right, guys, have a great trading.